All right, so the first thing that you need to do when picking options is, first of all, whatever stock it is that you're going to be looking at. So, like, say here, Cipher, chart it and find your target. So, I'd be looking at this, the anchored VWAP up here, 2165 area. Um, and this is on the hourly chart. So, if something is on the hourly chart, you would expect it to hopefully take place within the next like week or so. This is, yeah, August 12th. It's the 6th right now. So, yeah, about a week. Um, if you're looking for something to happen within a week, I would usually buy about a month out. So, your options will all have expiry dates. You're going to want to be buying about a month out from where you're looking with an hourly chart. With a daily chart, at least a month, ideally 2 months. With a weekly chart, at least 2 months, ideally, 4 to 6 months. So as you scale up your time frames, you have to also scale up the date for the option expiry. If you're on like a 5 minute chart, I mean, you can day trade this. You can buy this week, you can buy next week, whatever. But we're looking at the hourly, and again, this is just a random thing that I'm looking at. I'm not condoning the purchase of this option. So 2165 is my target. So we're going to come over here and we are going to look at Cipher options. So here we would then pick a month out. So let's go for 918. That is kind of like the main expiry. Of course, you can do 904, which would be closer to a month, but 918 is the main expiry. So it's the third Friday expiration of every month is the main. That's going to have the most volume, the most liquidity. That's going to be the easiest one to sell and the easiest one to buy at market price. You want to pick the strike. So the strike that I'm going for is 21 because, again, 2165 is my target. So that would put the 21 call 65 cents in the money, meaning the price of the stock is 65 cents higher than where my contract would expire worthless. So because I'm targeting 65 cents above my call option, then if the stock trades at that price, my option will never be worthless. And as time goes on, the options decay in value, but mine will be safe because it's already in the money. It's already worth something because it can be converted to shares. If something is out of the money, so if you bought like a $25 call and the option in the stock is trading at 2165, it's $3-4 out of the money. And as it gets closer to that Friday that's expiring, the contract gets worth less and less because the likelihood of the stock trading at that price up at $25 gets smaller and smaller and smaller. So as the likelihood of that gets smaller, people are willing to pay less and less for it because it's a bigger gamble. So what you want to do is be realistic about your targets, pick something that's conservative, and then from there you can choose your strike. So once you choose your strike, I mean, I typically just do a market price, and then make sure you buy to open instead of close, and yeah, you go from there. It's pretty simple. We can do it on, let's try like Google. Google just had a nasty day yesterday. It's continuing that. It's down almost 1%. So if it were to break underneath this little volume block here, it could realistically drop down here to 338. So let me mark out 338. So if I was doing puts, this is the opposite side. 338 looks good. It's the top of that volume block. It's the top of this, or it's the bottom of this kind of like a bounce zone. So yeah, 338 looks good, which means I want to be targeting maybe like a 350 or 345 put. So let's come over to Google. You want to buy, oh, whoops, change that to put. You want to buy to open a put. And again, this is on the daily chart. So I'm going to be looking for a month out again. I'm going to do a month and a half. So 918 again. Yeah, the 350 put looks good. That is $1,100. I might want something a little cheaper. So let's look at the 345 or the 340. That would put it $2 in the money. So it's going to be $700, $2 in the money at my target. And then once I'm there, trim some. And then from there, you can look at new targets like 325. If that's the case, keep holding some of your puts, but you want to sell at your target because as soon as this thing has a little bounce, it's going to wipe out your profits. Options are pretty ruthless. So let's go ahead and here, let's buy a couple of these. Place order. Thank you. Yeah, it's as easy as that.